Amo, you magnificent bastard, I read your book!
This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. You're wondering why your money's all gone. I've got some great examples for you today. 2 fantastic examples. Number 1, David Harding appearing on CNBC. I believe this is his 5th time appearing. Number 2, an article from the reformed broker, Josh Brown. The article titled, Silly Little Bitches. I tried to get Josh on, but he's tied up in a contract, so I can't get him on, but the article was a lot of fun, so I'm going to cover it anyways. Let me start with David Harding on CNBC, and I will let the interview roll.
We try to study the past to work out how to act in the future, to work out how to act intelligently in the future. And we've got a database of, 50 years data on all the world's financial markets, all the stocks and the bonds and all the financials about them and so on and so forth, and all the futures markets. And our scientists, we have 120 scientists, and their job is to look back into that database and ask questions like, if we'd done this in the past, would it have worked? And thereby devise a big computer program called the Winton system that is like a very elaborate plan for investing over the next 10 to 15 years, so you kind of know what you're going to do in all circumstances, and you don't have to respond every day emotionally to what's happening.
Let me interject there and just point out that David just defined trend following. We don't know. We don't know what's going to happen. But we test. We test in the past, and we see how our ideas would have performed. Now comes the first CNBC question.
Does that give you a good enough blueprint that you could actually say, we think the price of gold is going to go up 25% based on X or Y or Z, or is it a little more complicated than that?
It doesn't give us any good guidance, sadly, about what's going to happen in any market at all, ever. Our computer just doesn't give up. It just doesn't know when it's beat, basically. So it just goes on every day, flogging away at these things, none of which are good at forecasting markets. They just have a slight edge, like a 51% edge in a coin tossing contest.
Because history,
So let me ask the question. If you can imagine the visual, David is sitting at one of the CNBC roundtables. I think there's 3 CNBC folks sitting there with him. They invite this guy to the roundtable, David Harding, who's been a successful trend-following trader for over 20 years at least, runs one of the biggest trend-following hedge funds in the world. And the first question is literally, forget the question, it's an acknowledgement that I have no clue what you do. Not to the point where she couldn't figure it out. She could clearly read some background information and know that there is nothing in David Harding's system that tells him he's going to make 25% in any one market. So why do you ask a question? How are you that ill prepared? How are you that ill prepared? And isn't that the great arbitrage that's going on right now? Isn't that the reason that somebody even listens to me talk? Is because at least I'm pointing out, my gosh, these people are either woefully unprepared, lazy, ignorant, brain damaged. It gets better, though. It gets better. The next CNBC question coming in from Joe Kernan.
doesn't repeat, it rhymes. So you need to base your investments on something that might rhyme, not repeat, right?
Exactly, and you know, you mustn't be blown off course by what's happening day to day. You know, you have to have a long-term plan with investing.
Then you gotta let your losers run forever, though. That's what's scary. You cannot cut your losses short a lot of times, right?
Well, we have such a big portfolio, so diversified, that we really can let our losers run. You know,
can,
we're really not.
You got something else running.
If you've got a highly leveraged position, then you have to have a stop on and you have to get out. But we can really bury a lot of stuff.
Can you
inside
tell
this
us any
portfolio.
big, major macro things going on that the past has told us that we might not know about right now? Like
No, I can't.
Does the dollar lose its king dollar status eventually?
No, I mean, we have no knowledge or information from our computer systems like that. I can tell you what we're doing. This year we've been long stocks, short yen, short gold, and as is often the case, incidentally we've lost loads of money on bonds and lots of money on commodities and so on and so forth, lest you think I'm giving you all the winning trades,
right.
you know. But we've made a bit more than we've lost overall, which is, you know, kind of good, obviously.
Yeah.
I find the Kernan questions amazing. I covered Kernan's first interview with Harding in my book, Trend Commandments. I ripped Kernan apart. And look, I'm not saying Mike Covel is important, whatever. I'm just telling you what I did. I went through it systematically, point by point, and just tore it apart. And Kernan clearly had an agenda. He had an edge. He wanted to make fun of Harding in his first interview. So here we are now on the second interview, and he's like asking a technical trend-following trader if he has insights as to whether or not the dollar is going to lose its status. What is that? What is that? I've been to the floor of CNBC, the broadcasting floor. They spent millions of dollars to create this show. This fake show, these fake sets, this whole fake thing. How in blazes do they have David Harding on and don't know anything about what he does? Now, I don't know what David's motivations are for going on, probably just to spread the gospel, so to speak. He gets a megaphone, he'll take it. I'm guessing that's where he's coming from. But why do they have him on? If they're completely not prepared, they don't know what he does, they ask idiotic, moronic, inane questions. Why do they do that? I mean, maybe if you ask really stupid questions, like they do, if you ask questions that make it appear that you're like Joe Sixpack, half drunk, and you really don't know which way the wind is blowing. If you ask those kinds of questions, I guess it gives you a plausible deniability and a hope. I'm assuming this is the CNBC hope that you let David Harding come on, and then at some point in time in the future, when they predict something won't go right with David Harding's trading, that then they will have a big show or a breakdown where then they will say, oh, look, this guy Harding, we had him on and we asked him the tough questions and he had no answers and we always knew he was going to fail. I have no idea what CNBC's motivation is to have David Harding on. I mean, if you're going to have him on, why not ask him a question? Why not say, hey, David, you're trading like hundreds of different markets all around the world. Clearly, you don't have experts in your office that know all the differences about the palladium market or the gold market or individual equities. So you have developed something unique that allows you to trade these markets without having a fundamental perspective. That's really interesting, David. Could you explain that more to us? Instead, they ask him just questions that you can figure out from a few Google searches that is not part of his repertoire, not part of his trading. I don't have the answer. I mean, it's so mind-numbingly, it's just brain dead what they do every time that David's on these shows. If anyone's got a good answer, I'd love to know. Let me know. Let me know what this is. What is this that I'm watching when one of the best trend-following traders of the last 25 years appears on CNBC to be insulted? And I'm not saying that he feels he's insulted, but I'm just, essentially, they are insulting him by not even having any preparation to probe deeper and to maybe teach the audience something. I would think most of the audience goes away and goes, well, I don't really know what the guy David does, but that's a good interview with CNBC. They ask the tough questions. That's why I like them. That guy Kernan, he's really good. I think it's something like that. Let me let me move on to my other issue I wanted to address. And Josh Brown is, I don't want to say partner, but I don't know what term it would be, but let's say he's partners close associates, I think he's partners with Barry Ritholtz. And Josh runs a website called The Reformed Broker. And my assistant sent me this article that he wrote called Silly Little Bitches. And I immediately thought of Ginger Rogers' classic dance number about being in the money. And Josh goes on to talk about the Wall Street Journal having an article called Investing for the Fun of It. And Josh says, you're dicking around with high flyer Chinese internet stocks between meetings just because, why not? He goes on to quote an excerpt from New York Magazine, which is a great article called The Age of Bullshit Investments is Back. You're jumping into ETFs of IPOs and paying above the NAV just for the privilege of being first. He goes through a couple of these different article links, and I highly recommend reading his article, once again, called Silly Little Bitches. But he says, this is where we are now, the silly season. Phase 3 of the bull market that for years no one liked, the excitement phase, which gets followed by thrill and euphoria, at least on the chart on his website. Josh goes on to say, the next part coming up, this is the part where you're about to go effing bonkers. Absolutely stark raving mad. You can't help it. It's how you're wired. You can deny it out loud, but I know what's really going on in your head. Quote, I just made a lot of money on this stock. Therefore, I can make even more money on the next one. Everyone else is doing it. End quote. Go for it. Be somebody. You know you want to. I love that. I love that he's coming out and saying what he's saying in this piece, because it's a feeling that I think most wise people are having. Anyone that was around in 1999 knew, yes, I'm going to be long until this baby goes down. But everyone knew we were reaching the funny phase. And we are clearly in the funny phase now. Covel, that sounds like a prediction. You're telling us to do something. Something's going to happen. I'm not telling you a damn thing. I've been telling you the same thing all along. Have a system. Know your entries and know your exits before you ever decide to invest or trade. Have the plan. But look, when you look at what I'm talking about today, the CNBC misinformation campaigns that you see in an interview with David Harding, you see somebody like Josh pointing out, wow, we've really entered the silly season. So what does it mean for you? It means you need a system. You have to know what portfolio you are trading and why. How correlated are the instruments in the portfolio that you are trading? When are you going to enter? What is your entry strategy? How much are you going to bet? And if you've not read about bet sizing, please go to Ed Secoda's website and read his bet sizing work. Good stuff. Find the article. There's a PDF article with Ed Secoda and David Druz, D-R-U-Z, about heat. Find that. Read it. So you got your portfolio selected. You know your entry strategy. You know how much of your limited capital you're going to bet on each trade. Now, when do you get out? When do you get out? When do you get out with a small loss? And when do you get out with a big gain? Right now, there is a lot of open profit, so to speak, in equity markets. And we all know the vast majority of that capital has no exit plan, because the vast majority of that capital is chasing benchmarks. So they can't afford to do anything different because their clients only want benchmark returns. That's all they're going to get. The only reason you possibly enjoy listening to me break these issues apart and break it down, the only reason you possibly enjoy this is you think of yourself as somebody different. You think of yourself as not part of the sheeple community. Because if the sheeple is your thing, turn me off. I'm just going to frustrate you, infuriate you, tick you off, make you upset. If you don't want any of those things, what you do is you log on to the sheeple system. Daddy government takes over for you. You go long and you wait for a crash. And when the crash happens, you lose 50 to 75% of your net worth in short order. And then you're sitting there like a small child, probably with wet pants. You've probably had an accident because the anxiety alone. You've lost 50 to 75% of your net worth. But you know what? Maybe you even feel good about that because you look over at your neighbor and, hey, Bob, we both lost 65% this time. Yeah, Dan, it's tough, but we're in this together. So at least the Fed's looking out for us. The president's looking out for us. And that system, I tell you, it's tough when things go down big, but what other choices do you have except being a part of the matrix, being part of the system? Yeah, you're right. It's really good. I'm glad we're a part of it. Yeah, man. Break out and do something different. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.